All right, so today we're gonna dive into a topic that I find really fascinating.
Okay.
It's about these unconventional CEOs,
Right.
and the book that we're going to be talking about is called The Outsiders,
Okay.
and it profiles 8 CEOs who achieve incredible success,
hmm
but by often doing the opposite of what everyone else was doing.
Yeah, it's a really fascinating concept.
Yeah.
We often equate CEO success with like rapid growth
Right?
and, big acquisitions.
Huge companies.
Yeah, but The Outsiders really challenges that
Oh,
notion
yeah.
and argues that the real measure of a CEO
hmm
is the increase in per share value
Right.
that they deliver to shareholders.
Yeah, that's a really good point. It's not about building the biggest company.
Right.
It's about building the most valuable company
Exactly.
for the shareholder.
And the book really argues that capital allocation is the most critical skill a
Yeah.
CEO needs to achieve this.
I think that's right. And they even say in the book that leading a company without understanding capital allocation is like a talented musician
Oh, wow.
suddenly being made chairman of the Federal Reserve.
That's a great analogy.
It's a completely different skill set,
Yeah, and a skill set that surprisingly isn't emphasized enough.
right?
The book highlights how many CEOs rise through the ranks
Mm-hmm.
based on operational expertise,
Right.
but are ill-equipped to handle the complexities of capital allocation.
Yeah, it makes you wonder how many potentially great companies have been held back.
Right.
CEOs who are brilliant operators,
Yeah.
but poor capital allocators.
That's a great question.
Yeah,
And it's one of the reasons The Outsiders is so thought-provoking.
totally.
It challenges us to rethink our assumptions about what makes a successful CEO.
Absolutely.
Yeah.
So who are these outsider CEOs? What made them so different?
Well, the book profiles 8 individuals,
Okay.
each with their own unique story. There's Tom Murphy,
Okay.
who built Capital Cities Broadcasting into a media powerhouse. Wow.
Henry Singleton.
Okay.
The engineering genius behind Teledyne, Bill Anders.
Okay.
The former astronaut who turned around General Dynamics.
That's interesting.
And John Malone, the cable industry pioneer who led TCI.
Wow, what a range of people.
Yeah.
Okay, so I'm already intrigued.
Yeah.
Let's start with Tom Murphy.
Okay.
What was so special about his approach?
Well, Murphy was a master of efficiency
Okay.
and a firm believer in decentralization.
Okay.
He ran capital cities with a remarkably lean corporate structure, empowering his managers to make decisions without layers of bureaucracy.
So he really believed in pushing that decision-making down,
We did.
closer to the...
Yeah. And there's actually a famous anecdote about Murphy's commitment to cost cutting.
Oh, I love these anecdotes.
He once decided to only paint the sides of the company's building that faced the road
What?
to save money.
Whoa, way!
Yes.
That's so funny.
I know.
Wow. So I guess it's safe to say he wasn't focused on appearances.
He wasn't focused on appearances. But did this frugality actually translate into better returns for shareholders?
It absolutely did.
Okay, good.
By focusing on industries with strong fundamentals, making smart acquisitions, and consistently buying back stock.
Okay.
Murphy delivered exceptional returns.
Wow.
And when he eventually sold Capital Cities to Disney,
Mm-hmm.
it was worth more than CBS, the industry giant that dwarfed Capital Cities when Murphy took over.
So he beat Goliath
He beat Goliath
by being lean and mean?
by being lean and mean.
It sounds like he really embodied that principle of focusing on per share value
He did.
over sheer size.
He did. And his story highlights another important point.
Okay.
The power of thinking long-term.
Mm-hmm.
Murphy was willing to make decisions that might have hurt short-term profits,
Okay.
but ultimately benefited the company in the long run.
Can you give me an example of that?
Sure. At one point, Murphy invested heavily in a new printing plant,
Okay.
which was a major capital expenditure.
Yeah.
It squeezed short-term earnings, but it ultimately gave Capital Cities
Okay.
a significant competitive advantage and improved its long-term profitability.
That's really interesting. That's a great example of how these outsider CEOs
Right?
were willing to think differently.
Yeah.
So we've got a cost-conscious, long-term focused CEO in Tom Murphy.
Mm-hmm.
What about Henry Singleton?
Okay.
How did his background as an engineer shape his approach?
Well, Singleton was a brilliant analytical thinker
Oh.
who brought a very data-driven approach to business decisions. He was a master of capital allocation,
Okay.
constantly evaluating different options and shifting resources based on where he saw the best opportunities.
That must have made him very adaptable.
It did. He wasn't afraid to buy or sell businesses,
Yeah.
invest in new technologies, or repurchase stock,
Mm-hmm.
always with an eye on maximizing shareholder value.
Wow.
He was particularly known for his aggressive use of share buybacks.
Oh, interesting.
He called his approach the suction hose method.
Suction hose method.
Yeah, where he'd use leverage to buy back massive amounts of stock.
Wow.
When he believed it was undervalued.
So not your typical, dip your toe in the water approach to buybacks.
No.
He was going all in when he saw an opportunity.
Exactly. And it paid off handsomely for Teledyne's shareholders.
Wow.
Singleton also believed in empowering his managers.
Oh, way.
He gave them a lot of autonomy and avoided building a large corporate bureaucracy.
So similar to Tom Murphy in that way.
Very similar.
Interesting.
This decentralized approach allowed Teledyne to be very nimble and responsive to changing market conditions.
Yeah, it's fascinating to see how these CEOs, despite coming from different backgrounds and operating in different industries, shared this core belief in decentralization.
Yeah.
It seems counterintuitive, but it clearly worked for them.
It does make you wonder if traditional corporate structures with their layers of management are actually hindering innovation and efficiency.
That's a great point. It seems like these outsider CEOs were questioning a lot of the conventional wisdom of their time.
They were.
Okay, so we've got Murphy and Singleton both emphasizing capital allocation and decentralized structures. Where do we go from here?
Well, let's move on to Bill Anders.
Okay.
Who took the helm of General Dynamics at a very challenging time for the defense industry.
He came in with a completely different perspective, right?
Yeah.
I mean, he was a former astronaut.
Yeah.
How did that experience shape his leadership at General Dynamics?
Well, I think Anders' background definitely gave him a unique outlook.
Okay.
After orbiting the moon,
Yeah.
he likely had a different sense of risk and reward than the average CEO.
That's probably true. When he took over General Dynamics in the late 1980s, the defense industry was facing a massive downturn with the end of the Cold War.
Right.
So he stepped into a pretty tough situation.
He did. Many defense companies were struggling to adapt, but Anders took a radical approach.
Okay.
He recognized that the industry was facing overcapacity.
And made the tough decision to shrink General Dynamics dramatically.
Really?
Yeah. He sold off entire divisions.
Wow.
Even ones that were considered core to the company's identity.
See, that's so counterintuitive to how we usually think about CEOs. They're supposed to grow companies.
Yeah.
Not dismantle them.
It goes against the grain, for sure.
Yeah.
But Anders wasn't afraid to make tough choices, even unpopular ones.
Wow.
He was laser-focused on creating shareholder value.
Okay.
And he believed that selling off underperforming assets and returning the proceeds to shareholders was the best way to achieve that.
And that's where his outsider perspective really comes into play.
Exactly.
He wasn't bound by the same conventions or emotional attachments that might have held back other CEOs.
Exactly. He was willing to challenge the status quo and do what he thought was best for the company, even if it meant going against the prevailing wisdom.
Interesting. So even though it was radical at the time, it turned out to be incredibly successful. It did.
So we've got 3 CEOs so far, Murphy, Singleton, and Anders, each with their own unique style, but all demonstrating this core focus on capital allocation and shareholder value.
Exactly.
Who's next in this lineup of unconventional leaders?
Well, let's talk about John Malone.
Okay.
Who built TCI into a cable television empire.
Okay.
He was a master of leverage and financial engineering, constantly finding ways to acquire assets and structure deals in a tax-efficient manner.
So creative.
Very creative.
Yeah.
He also pioneered the concept of EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization.
Hold on. Didn't he actually invent the term EBITDA?
He did.
Wow.
It's become a widely used metric in the business world, particularly in industries with high capital expenditures like cable.
Yeah.
Malone understood that focusing on cash flow rather than just reported earnings was crucial in a rapidly growing industry.
That's a great example of how these CEOs were thinking differently and finding creative solutions to the challenges they faced.
Right.
It wasn't just about following the traditional accounting rules, but finding metrics that actually reflected the true value of their businesses.
Precisely. And Malone's focus on EBITDA allowed him to make acquisitions and investments that might have seemed risky based on traditional metrics, but ultimately generated huge cash flows for TCI.
It seems like he was always one step ahead of the game.
He was.
Anticipating trends and finding ways to capitalize on them.
Yeah.
Did he also embrace the decentralized approach we saw with the other CEOs?
Absolutely.
Okay.
He had a deep distrust of bureaucracy and believed in giving his managers a lot of autonomy.
Okay.
He famously said that his ideal organizational structure was a bunch of little guys in little rooms.
Oh, wow.
All across the country making decisions close to the action.
So another vote for decentralization.
Another vote for decentralization.
It's remarkable how this principle keeps coming up.
It is.
These CEOs really believed in empowering their people.
They understood that the best decisions are often made by those closest to the customer and the market.
Yeah, okay. Now shifting gears a bit.
Okay.
The book also includes Katharine Graham,
Yeah.
who led the Washington Post Company.
Mm-hmm.
Her story is fascinating because she came from a completely different background than the other CEOs we've discussed.
Yeah.
I was wondering about that.
Yeah.
She's best known for her role in the Pentagon Papers and Watergate.
Mm-hmm.
Not necessarily for her financial acumen.
Right.
What made her an outsider CEO?
Well, Graham inherited the company unexpectedly and had to learn the ropes quickly.
Wow.
While she might not have had the same financial background as some of the others, she had a sharp mind, a willingness to learn, and the courage to make tough decisions.
I can imagine that taking over a major media company under those circumstances must have been incredibly daunting.
It was. But she rose to the challenge.
Okay.
She surrounded herself with talented people, sought advice from mentors like Warren Buffett. Oh, wow.
And developed a deep understanding of the business.
Speaking of Warren Buffett, that's a name that always comes up when discussing successful investors.
Right.
It's no surprise that the book includes him in this group of outsiders.
Right.
It's inevitable.
It is.
Buffett, like the other CEOs we've discussed, shares this core belief in the importance of capital allocation.
Right.
His entire career at Berkshire Hathaway can be seen as a masterclass in it.
It can.
He's built a phenomenal track record by investing in high-quality businesses, being patient, and avoiding the distractions of Wall Street.
Yeah, but his approach is also about more than just picking stocks.
Yeah.
He's known for his hands-off management style.
Right.
Letting the CEOs of his companies operate with a high degree of autonomy.
He's right.
He trusts his managers to make the right decisions and doesn't micromanage them.
Exactly.
This decentralized approach is a key part of his success.
Right.
It allows him to focus on the big picture, capital allocation decisions, while his managers focus on the day-to-day operations of their businesses.
It makes a lot of sense. And it seems to be a recurring theme with these outsider CEOs.
It does.
Decentralization, capital allocation, long-term thinking.
Yep.
These are all core principles that have contributed to their remarkable success.
Totally. But we still have a few more CEOs to cover.
Right.
What about Bill Stieritz?
Okay.
He ran Ralston Purina.
Yeah.
Which seems like a very different world from the ones we've been discussing.
It is a different world. Stieritz was a fascinating character.
Okay.
He was a master brand builder.
Okay.
And a very shrewd capital allocator.
Right.
He took a company known primarily for pet food and turned it into a consumer products powerhouse.
Wow.
Through a series of acquisitions, divestitures, and spin-offs.
I remember reading that he was known for his public LBO approach.
Yes.
What exactly does that mean?
It means he applied the principles of a leveraged buyout.
Okay.
Typically used to take private companies public to a publicly traded company. He wasn't afraid to use debt strategically to finance acquisitions and buy back stock.
So he was willing to shake things up and challenge the conventions of his industry.
Absolutely.
Yeah.
He was a contrarian thinker who focused on creating shareholder value, even if it meant taking on debt or making moves that Wall Street analysts didn't understand.
Interesting.
And his results speak for themselves.
Yeah.
He generated exceptional returns for Ralston Purina shareholders over his long tenure as CEO.
It's amazing how these CEOs, despite operating in such different industries, all share this common thread of challenging the status quo and being willing to make bold moves.
Yeah.
It really reinforces the idea that these principles of capital allocation and unconventional thinking can be applied across a wide range of businesses.
That's one of the key takeaways from The Outsiders.
Yeah.
It provides a framework for thinking about business and leadership that is relevant, regardless of industry or company size.
Okay, we have one more CEO to cover.
Right.
Dick Smith of General Cinema. What made him stand out from the crowd?
Smith was a master of patient capital allocation.
Okay.
He understood that sometimes the best investment is simply waiting for the right opportunity. He wasn't afraid to sit on a pile of cash for years.
Really?
Waiting for the perfect deal to come along.
That takes a lot of discipline.
It does.
Especially in a world that often rewards immediate action and constant deal-making.
Right. It does. But Smith was incredibly disciplined.
Okay.
And had a clear set of criteria for any acquisition he made.
Right.
He wasn't going to overpay or chase a deal just because everyone else was doing it.
Right.
And when he did find an opportunity that met his criteria, he was decisive and moved quickly.
So he used a combination of patience and decisiveness.
He was.
That's an interesting balance.
Yeah.
And it sounds like he was willing to invest in a variety of different industries.
That's right. His major acquisitions were in soft drink bottling, retailing and publishing.
Wow.
Completely different businesses.
Totally different.
But he always focused on acquiring undervalued assets.
Okay.
With strong cash flow potential.
He sounds like a true value investor.
He was.
Always looking for those hidden gems.
Yeah.
It's incredible how this group of CEOs, despite their diverse backgrounds and industries, all converged on this core set of principles.
He really is.
Yeah.
And it speaks to the power of these ideas.
Yes.
They're not just theoretical concepts.
Right.
They've been proven to work in the real world time and again.
So we've covered all 8 of the outsider CEOs.
We have.
It's clear they were all exceptional leaders.
They were.
Who achieved remarkable success.
Yeah.
But what's the overarching message here?
Right.
What can our listener learn from their stories?
That's a great question.
Yeah.
And one we'll explore as we wrap up our deep dive into the outsiders.
I think what strikes me the most about these outsider CEOs is their unwavering commitment to rationality.
Right.
They weren't swayed by trends or fads.
Yeah.
They didn't chase headlines. And they weren't afraid to make decisions that went against conventional wisdom.
Yeah, that's a great observation. They had the discipline to stick to their principles, even when facing pressure to conform.
Yeah.
The book argues that this independent thinking was a key factor in their success.
Yeah.
They weren't afraid to be different.
Right.
To challenge the status quo and to chart their own course.
And it's interesting to note that their rationality extended beyond just numbers and financial metrics.
Right.
They were also rational in their approach to management, often favoring decentralized structures and giving their teams a lot of autonomy.
That's right. They understood that empowering people closest to the action often leads to better decision-making.
Right.
And a more agile organization.
Yeah.
They weren't micromanagers or control freaks.
Right.
They hired talented people and then trusted them to do their jobs.
Yeah, it's almost like they viewed their role as creating the right environment for success rather than dictating every move. They set the overall direction, made the key capital allocation decisions, and then let their teams run with it.
Exactly. They were the architects, not the builders.
Yeah.
They created the framework, but they didn't try to control every detail.
Right.
This allowed their organizations to be more innovative and responsive to change.
Okay, so we've talked about the principles, the personalities, the successes. But what does it all mean for our listener? Can these lessons be applied by someone who isn't running a multi-billion-dollar company?
Absolutely. The beauty of The Outsiders is that it provides a framework for thinking about capital allocation.
Okay.
That is relevant at any scale.
So it's not just a book for CEOs.
Yeah.
It's a book for anyone who wants to be a better decision maker.
Precisely. It's about thinking like an owner, being disciplined with your resources, and always looking for ways to maximize value.
Yeah.
It's about focusing on the long term, not getting caught up in short-term distractions, and having the courage to make tough choices.
The book ends with a really helpful checklist for making effective capital allocation decisions.
It does.
It's basically a distillation of the key principles that these outsider CEOs followed.
Exactly.
Do you want to walk us through some of those points?
Sure. One of the most important takeaways is that capital allocation should be a CEO-led process. It's the CEO's responsibility to set the overall strategy and make the key decisions about how capital is deployed.
That makes sense. It's too important a task to delegate.
Right. Another key point is to set a high hurdle rate for investments. This means having a clear understanding of the minimum return you're willing to accept before making an investment. It forces you to be more selective and to only pursue opportunities that have a high probability of success.
So it's about being disciplined and not chasing every shiny object that comes along.
Exactly. The checklist also emphasizes the importance of calculating returns for all options, including stock buybacks, It's easy to get caught up in the excitement of making acquisitions.
Right.
But sometimes the best use of capital is to buy back your own stock, especially if it's undervalued.
It's like looking in your own backyard before you go shopping elsewhere.
That's a great analogy. The checklist also reminds us to focus on after-tax returns, which are the returns that actually matter to shareholders.
Right.
And it encourages us to consider a decentralized organizational model, empowering people throughout the organization to make decisions and drive innovation.
Yeah, it's amazing how all of these points tie back to the core principles we've been discussing. Rationality, long-term thinking.
Right.
Decentralization, and a focus on value creation.
It all comes full circle. The Outsiders is a reminder that success isn't about following the crowd or adhering to conventional wisdom.
Right.
It's about thinking independently, challenging assumptions, and making bold decisions that create long-term value.
So as we wrap up our deep dive, what's the one key takeaway you'd like our listener to remember?
I'd say this. Don't be afraid to be an outsider.
Okay.
Don't be afraid to think differently, to challenge the status quo, and to forge your own path.
Right.
These CEOs weren't afraid to stand out, and that's ultimately what made them so successful.
That's a great message to end on.
Yeah.
Thanks for joining me on this fascinating exploration of the Outsiders.
It's been a pleasure.
And to our listener, we hope this deep dive has given you a new perspective on what it takes to achieve extraordinary results.
Yeah.
Remember, sometimes the best path to success is the one less traveled.